Elevator music while you wait. I've never heard it, which is kind of funny. I know, wouldn't that be great? Change it up, get something to get us going. That would be awesome. How's everybody doing today? Hope you guys are doing well. Is it supposed to be like this? Asking $140? I don't know, 10KM. Is that your monthly subscription? Because the monthly subscription doesn't stop after you pass the evaluation. You still pay a monthly fee to trade with their money. Is it possible that that's what it is? So, call me crazy. I'd go to Apex. Thank you, Ron. Look at all these answers. Evaluation accounts, platform connections, funded accounts. And then 10KM, one thing you can do is go over to the traders chat side. Very nice. Congratulations for that. Let's throw that in there first. Congratulations. Head over to the traders chat. There we go. And I would go ahead and ask over there and see if somebody who's been using Apex for a while knows. And again, I'm not sure. I would reach out to Apex. I would also, but is that what you were paying per account? Were you paying $140 per account to get funded? Yeah, then I would definitely look into it. Ask over in Traders Chat. See if somebody that's over there knows what it is. It may just be a mistake too, right? Yeah, so I'm not sure. I would reach out to Apex for sure. But you may get quicker answers over there in the Traders Chat. Somebody probably has run into a similar scenario and can give you a little insight. I'm sorry that I'm not more helpful on that one. It's not because I don't want to be. And Apex is still running a 90% promotion. That's pretty awesome. Wow. That's some savings, isn't it? I love flash sales. Apex does a lot of them. And what it is they're saying, you know what we have has value. What we have is worth getting into, and we know that if you just get into what we're doing, you'll be good. Gary, I'm not sure what that is. 50,000, 10 contract rhythmic. 36.16 for the first month, 36.16 after. Yeah, it should be on your dashboard. Thank you, Gary. So on your dashboard, you may see exactly what your recurring payment is, 10K. You can go take a look at that. Appreciate that, Gary. And then John Novak, throwing a link in there from support. Lifetime fee option applies only to new PA accounts. You have the option to choose between monthly or lifetime. So this may be what you're looking at too. It may be the lifetime fee for each 10K. A lot of great information coming from the community here. Gotta love that. I hope you get your answers, and do me a favor, come back and share what you learn. All right, guys. Greetings and salutations. Welcome to the AM Education Room. I always say the AM because there used to be a PM. There is no longer a PM Education Room. We do it all here in the morning. Oh, there you go. One-time fee. So, yeah, so that looks like your lifetime. Yeah. If you choose the lifetime option. So that's one time for the next 10 years, 10K. Stay consistent on 10 accounts. You'll have that paid off tomorrow, right? Yeah, so just making a choice there. But seriously, congratulations on getting funded. It's amazing. Keep doing. Stay the path, right? Once you get funded, don't change what got you there. If there's one lesson that I've learned teaching this class, working with you guys, talking with people, is that once you get funded, don't change what got you there. Gonna take a break for 2 days. Right on. I like it. Dance with the one that brung you. There you go. I love it when old people reference the sock hop. Man, those were good times, right? Ron, grease that hair up. Go do the twist with your best girl. All right, guys, let's get this classroom going. 10K, take care. Congratulations. It's not really a day until we give Ron just a little bit of grief, right? Guys, my name's Mark. We're going to be talking a lot about patterns today. We're going to be talking a lot about advantages. I want you to write that word down on a piece of paper. Advantages. It makes sense, right? So I was talking to my wife yesterday. I do that sometimes, and sometimes she listens. And it was one of those things where, you know, you bring work home with you, and I'm talking, and I was telling her, I was like, do you know what? I said, do you know why we trade? You know, if you sat down and you asked yourself, and you said, why am I trading? Why do I want to be a day trader? What's the end goal, right? Is there anyone in this room that wouldn't say make money? I hope that's why you're doing this. I hope if you're just bored, that's cool. Keep it on simulator forever. Don't worry about it. It's fun. It's like playing a video game every day, right? Trying to win. But the reality is that we're all here trying to make money, trying to take advantages and capitalize on them. So I'm not going to go into some big tirade, but what I'm going to say is that if you have a system, a plan, a methodology that has been proven to win more than it loses, if you have something in your bag of tricks that puts you at 70% winners, even 60% winners, 50% winners, and you're winning more than you lose, then you're coming out in the black, right? Ask yourself, if I have something that does that, why am I chasing more? Why am I trying to be the first one in? Why am I trying to find so many moves when all I really need to do is find the best moves? And I think that the answer is, and guys, feel free to jump in and chime in, is that you want to be a millionaire tomorrow. And you're saying to yourself, man, if I'm not trading every trade, how am I going to make $1 million? And what most people forget is that $400 a day on a 10 lot is $4,000, right? And $400 a day on a 100 lot is $400,000. Let that sink in for a second, or 40,000, excuse me, $40,000. So what happens is that you can really find a level of success without having to trade every second of every day. But you're going to build up, right? You're going to build up an account. If you have a $5,000 account, you're going to have to consistently win that $400 over the course of a month to get that 2 lot to a 4 lot. And then you're going to have to repeat that process to get that 4 lot to a 6 lot, to an 8 lot, to a 10 lot, to a 20 lot. And then it just goes exponential. But what you can do is you can do that off of one trade, and I've watched people do this off of one trade. And it brings me back to my favorite picture, that when you're trading the markets, it's so important that you just remember, keep it simple, keep it focused, have a reason for everything that you do. Be Tom Cruise in The Last Samurai. Don't have too many mind, right? Too many mind. Mind the HVA trade, mind the momentum trade, mind the big chart, mind the 8 range, mind the 13 range. When what you can really do is just mind the advantages present, and focus on the best of the best. And this little soapbox comes from watching people scramble for everything and forget about what has proven to be consistent. So we're going to focus on consistency today. We're going to focus on simplicity. I'm going to focus heavily on the rules. I encourage you guys to build a trading plan that suits your needs. But if you can't crawl yet, there's no reason to try to walk, right? And if you're unable to walk, man, don't try to run. You're just going to hurt yourself. So let's start the day the way we start the day. Go into forexfactory.com, making sure that there's not a news release that removes the advantage of a normal trending market, right? So every time I look at forexfactory.com, there's red boxes that let me know that there's high impact news. We saw that this morning. You watched the S&P spike. At 10 a.m. today, we have medium impact news, which is also capable of creating a spike, a little unpredictability. So I'm going to put a note on a piece of paper. Hey, don't trade into 10 a.m. news. I'm going to ask Siri to set a reminder for me. I'm going to, hopefully, someone in the class is going to go, hey, don't forget news in 5 minutes. But every morning I'm looking at news. And it's real important that I do that because I don't want to jump in front of a freight train of emotion, as I like to call it. And then everything that we talk about today, guys, there's no secrets with Nexgen. If it is something that we teach, something that we talk about, something that is in the curriculum, you're going to find it on the education page. And if you go to the tutorial section, even the URL tells you building a foundation, right? The first hour of this classroom is 100% dedicated to building a foundation. Creating an awareness with your indicators so that you can recognize advantages. So while everybody wants to be a day trader, I'm going to encourage new users. Change your thinking, change your language, be a chart reader. Be somebody that can open up their charts, take a look at their indicators, and recognize where the market is likely to continue and use that point for entries, where the market is likely to go and use that spot for targets, and where the market is likely to stop and use that as a giant waving red flag saying don't trade into this area because it may create a bounce or reverse the market completely. That's what this first hour class is going to do for you guys, because trading the market is 90% chart reading. It's only 10% trading. It's taking these 3 key concepts and applying them to 3 simple rules for a high probability trend trade. 3 advantages: momentum, a clear path, and an entry area. That's your recipe for a trade. Most of you are going to recognize this within the first week or 2. You're going to be able to identify momentum on a large chart. You're going to be able to identify a clear path on a large chart, and you're going to be able to identify an entry area on a smaller, faster chart, using a 2-chart process to gauge advantages, the trend of the market, the strong triggers, and the termination conditions on a 13-2. And then taking this broad stroke of a brush, this overall look of the market, and refining it on a smaller, faster chart to find that place where the market is likely to continue. And this is what we're going to talk about. It's a 2-chart process. It's 3 very distinct advantages. And you have to know your rules before you try to break them. And this is cueing somebody to write in there, learn your rules like an artist so that, or what is it? Learn your rules like a something so that you can break them like an artist. So this is what we're going to focus on. Excuse me. And I'm going to go, scholar, thank you, Ron. And I'm going to go to our glossary of common terms. Thank you, gentlemen. And I want today to be a day of reflection. Are you taking a trade where every indicator on every chart agrees with the rules for the trade? And this is when all the triggers are the strongest. Rule number 1, when there's no termination conditions. Rule number 2, and when there's no trouble spots between your entry and your target, guys. This is the trade that if you focus on for 20 days, if you commit to the best of the best looks, you're going to become a chart reader. You're going to be able to recognize where the market is likely to continue, where it's likely to go, where it's likely to stop. You are going to create this awareness and this trust in a methodology that's been proven to win more than it loses. And this is going to be your foundation. This is going to be the basis for getting to that next level, right? So this is what we're going to focus on. 3 rules, 2 charts, 3 very distinct advantages which create the plan for a trade, the recipe for a trade. And then that's your walking. Guys, here's your crawl. Medium probability trade. Your chart reading is going to take you to this next level. I promise. I haven't met anybody yet that hasn't gone to the next level, at least in ability, even if they don't in execution. Because the successful traders that I see take the same trade every time. And that's one of the truths for day trading. The most successful traders have a look, maybe 2 looks. And they're patient, and they wait for their advantages, and they never miss it because they trust the rules. You see it in this class every day. But a medium probability trade is going to be defined as when most of your indicators line up for a trade, however a small issue exists. Your ability to read charts based on that foundational education that you're giving yourself right now is going to help you identify those areas, that one small issue. This probably will be the vast majority of your trades. And you'll take these trades and manage them assertively. Your ability to read charts is going to allow you to take them assertively. You're going to be able to identify trouble through your chart reading, take quick profits, get to a 0 loss level. And we talked about this yesterday. I'm going to reiterate today. Your medium probability trades say that a small issue exists, right? A small issue. Singular. It means that one thing may not be perfect, right? Maybe one piece of the recipe hasn't been fulfilled completely. When you begin compounding the issues, your likelihood of success goes down dramatically. It's important that you understand that. So focus on these advantages. Go into every trade you take looking for reasons to win, looking for advantages, rather than looking for reasons to lose, right? Because you have no control over the market, whether you win or lose. The only thing that you have control over is taking a trade that provides a statistical advantage. And this high probability trend trade, this first trade that we talk about, is a trade that typically wins 70 to 80% of the time when you learn to execute it properly. This is your statistical advantage. Embrace advantages. Learn to recognize them in the moment. Rule number 1 on that 13-2 chart says strong triggers. What does strong triggers mean? Strong triggers means that in an uptrend, when those triggers are their absolute strongest, you have the advantage of momentum. The small triggers, these solid lines, break above and away from the large triggers. Both are wide and angled in the direction of the trend. This is your advantage of momentum. This look lets me know that the odds are favorable for the market to continue in the direction of the trend. In a downtrend, the small's below the large are wide. They're angled in the direction of the trend. Guys, this is the advantageous momentum, the odds favorable momentum, because the odds are favorable for the market to continue in the direction of the trend. And if you commit to this first advantage, you'll be amazed at how often that market does in fact push in the direction of the trend. Because when the trigger lines come back inside, a lot of you are chasing momentum trades right now. If your trigger lines return to the large, you have lost momentum. This is what we call a weakening of the large triggers. And when you have a weakening of the large triggers, the phrase that I use is anything can happen. Anything can happen up or down. That clear advantage has gone away. And during the course of the day, this is about a 4-hour stretch. You're going to see odds favorable momentum, and that market continue to push. You're going to see it switch to anything can happen, that weakening of the large triggers. And oddly enough, these become turning points. Odds favorable momentum, odds favorable momentum. And sometimes those trigger lines aren't going to agree. Sometimes the large are down, the small are up. The background is green in an uptrend, but both are down. Guys, these are the points where you sit on your hands and you recognize that that advantage has gone away. And if you take a trade during this time, you're really trying to predict rather than react to the information being given. So rule number one is going to give a very clear opportunity. It's going to give a very clear advantage of momentum. And what you're going to find is that it doesn't happen from start to finish. You're going to have to be patient to wait for that momentum to happen. And you're going to have to be aware so that you can look for your opportunities when it's present. On the 13-2 chart, we're going to scroll back today and look at these. On the 13-2 chart, that singular bar that we're gathering all of our information on, sometimes you'll see these tails or these wicks. These are all potential long trades. These are all potential small chart entries that are happening with odds favorable momentum. And I'm going to teach you guys how to recognize these and how to study this best of the best look. So when the triggers are their absolute strongest and the market pulls back just a little bit, this is where you're going to capitalize on recognizing that area where the market is likely to continue. And if we look at a 13-2 chart, it becomes pretty easy to identify, right? Watch this. I can take everything away, all the noise. Let's go 2 triggers only. And I can identify when the smalls are strong, when the large are strong, when there's space between. And this bar is in the middle of maybe creating a tail. Here we see a big tail with that odds favorable momentum. Once again, tails right at the end of odds favorable momentum. And another one right here. This is the first point of study, guys. Go back and just recognize this look. Be very, very comfortable with this look. And then once you're comfortable with the look, well, then we can start adding in more indicators and making sure that we have a clear path. This is rule number 2 for a high probability trend trade. Once we have that advantage of momentum, we're going to make sure that we're not trading into an area likely to stop the market, that we're not trading into one of those key Fibonacci areas that can create a bounce or a reaction that could mess up our plans for a successful trade. And the areas that we're looking for: divergence highs, divergence lows. Divergence means, for those of you that are brand new, divergence means that a pivot was formed. And a pivot means that the market went from down to up or up to down. It's that little peak at the bottom, right? It means that when the sellers pushed this market all the way down to 78.65, they were losing momentum. And that momentum is identifiable from a negative number and a cyan line from a low, or a negative number and a magenta line from a high. What this means is that the opposing force, if it were sellers pushing down, the buyers stole their momentum and pushed the other way. Or when the buyers were pushing up, the sellers liberated their momentum and pushed the market down. We can identify these as key areas in the market, and they do have the potential to turn it. You're also going to recognize Fibonacci resistance, Fibonacci support, yellow 1-to-1 dots. And identifying these areas is a simple comparison of your trigger lines, the same ones that give you momentum, comparing your trigger lines versus the areas. And if price reaches an area, 2-part process. Price reaches an area of support in this picture. Those price bars come down, they come in contact with if the trigger lines that provide momentum, the smalls and the large, remain above this area of support, this is an area that has the potential to stop the market, has the potential to reverse the market. It has the potential to create a reaction large enough to mess up your attempt at a short. No more short trades into this area. Other side of the coin. Whoops. Good morning, Ziva. Price reaches resistance. Absolutely none of the trigger lines break through the area. This is an area that's likely to stop the market. This is an area that you're no longer taking trades into. No more long trades into an area where the trigger lines haven't broke. Price comes down to support, the same thing is true. No trigger lines have broken through. Guys, 90% of your day is spent reading your charts, waiting for advantages. 10% of your day is taking trades when those advantages come to light. In this picture, price comes all the way back up. And look at this, it reaches resistance, a divergence high, and a second resistance. It trades above that divergence high a little bit and then back below. None of the triggers break. Guys, this is a pivot stop out of a divergence high. Pivot stop outs, with or without fibs, are termination conditions. When it happens at a fib, Fibonacci resistance, it becomes even more powerful. So when this termination condition creates a full reversal of the market, large triggers go from green to red, it provides you odds favorable momentum. Guys, this is your best case scenario for a high probability trend trade. When a termination condition, price reaches 1-to-1s, the trigger lines remain above, creates a full reversal, large triggers go from red to green, small triggers get above, and this full reversal creates odds favorable momentum and provides that clear path of not reaching an area. Guys, there's another one of those tails showing you the highest probability trend trade you can take. That trade that typically wins 70 to 80% of the time. You see it in this picture. It runs all the way to that next area of Fibonacci resistance. I'm going to share with you my picture of recognizing when an area has broken. And this shows three likely scenarios, guys. Three things that you're going to see each and every day in the market. Price reaches an area, absolutely no trigger lines break through. The area is not broken, and therefore you do not have a clear path. Rule number 2 isn't met. You have forfeited the advantage of a clear path. Price reaches the area, both the small and the large triggers get to the other side of the area. The area is now broken. You have a clear path. Rule number 2 has been satisfied. It's time to look for an entry. Your first medium probability trade, your first shot at getting outside of this high probability trend trade is going to be this right here. When the small trigger lines break above or break through the area with odds favorable momentum. Can't stress that enough. With odds favorable momentum, because strong triggers break things. This 6980 area becomes an area with the potential to break, but it has not broken yet. It is not a clear path. You do not have rule number 2 satisfied, and it puts it into the realm of medium probability. Remember that when we define medium probability, we said that a small issue exists. This becomes your small issue, and therefore it's important that no other issues exist, which means that when you look for an entry on this medium probability trade, it should be the absolute best of the best entry on a 5-1. Is everybody comfortable? I've got 31 of you in here, still a little mellow in the classroom. Is everybody comfortable with the recipe? Price reaches an area. If none of your trigger lines go through, guys, you have waived your right to a clear path. Only you can make the decision on whether or not you want to still take a trade into that area. And I'm telling you right now, some of you will, because you'll have the other advantages in place and you're willing to take a shot. That's up to you. That's okay, Gary. So there's the first one. Sometimes, guys, That 13.2 turns from the middle of nowhere, right? We get a pivot. The market goes from down to up. And you're like, oh my gosh, we didn't hit anything, but it bounced up. I didn't hit anything with odds favorable momentum, and that market cruised right back to the downside. There is one termination condition that you'll look for on a 5-1. And the termination condition is true on any chart. It's important that you guys understand that these patterns, these looks, they're true on every time frame, every market. This could be the S&P, it could be crude, this could be Apple stock, this could be Tesla, this could be natural gas. The patterns hold true on every time frame, every market. But you're going to see this pattern on a 5-1 on your smaller, faster chart, on your entry chart, before you see the change happen on that larger, slower chart. And it's 3 divergences in the same price range may terminate the trend. Guys, remember that we kept it simple, right? What is divergence? Divergence equals a loss of momentum. That's all it is. You don't have to worry about what causes it, the mathematics that go on behind the scene, right? You don't have to know how to build a watch to tell time. Just understand that when you see the cyan line from a low 3 times, it may terminate the trend. When you see this magenta line from a high, it may terminate the trend. It becomes even more powerful when your trigger lines on that smaller, faster chart go from odds favorable to anything can happen. It adds weight to that potential termination condition. It becomes more powerful still when that third pivot prints higher than the previous from a low or lower than the previous from a high, because now we have a head and shoulders pattern, right? Tony, you passed 2 Apex accounts? Doing what I've been saying. Man, don't you put that pressure on me. All I talk about is being consistent and keeping it simple and trade advantages. Surely that's not what got you to your goal. He said with a smug look on his face. Guys, we know the recipe, don't we? Just got to follow it. So guys, you're going to see this low and this look at a high, these 3 divergences. You're going to see this. Whoops. When your 13.2 chart is changing, you're going to be able to identify change before you see it on the 13.2. So guys, that's your recipe, right? That's the first 2 ingredients for a trade. And Tony, you're absolutely right. You know what my most expensive accessory in my arsenal is? It's my opinion. Because it turns out my opinion means absolutely nothing. My hopes mean absolutely nothing. My wishes, my wants, my desires. Guys, the market doesn't care. It's a true story. The only thing I'm in control of is my recipe for success, and then executing when it's met and doing nothing when it's not. So is everybody good? Odds favorable momentum creates an opportunity for the market to be in a position where it's likely to continue in the direction of the trend. Advantage number 1. Not trading in determination conditions gives you the advantage of a clear path. Rule number 2, both taking place on the 13.2 chart. And when they're met, we're going to pinpoint, guys. We are going to recognize where the market is likely to continue. Your first 20 days with Nexgen, your first 20 days getting your poop in a group and deciding that you want to keep it simple should be dedicated to entries. 100% getting in at the proper spot, because great entries create manageable trades. I'm going to put that on a coffee cup. You guys think I'm kidding. I'm going to get an Etsy store and I'm going to put great entries create manageable trades on a coffee cup, and I'm going to send you guys Christmas presents. When the rules are met on the 13.2, guys, you're going to focus on your 5-1 chart. 1 and 2 are met. It's time to pinpoint where the market is likely to continue, and you're going to be able to pinpoint it with such accuracy that you're going to use a limit order. You're going to wait for the market to come to you, and you're going to use a limit order at an area inside of favorable large triggers. So I'm going to use a limit order to buy or sell a pullback. What's a pullback? A pullback is a small retracement in price counter to the underlying trend. A pullback happens when the yahoos that fight the trend, the yahoos that fight the momentum, when everything says up with a clear path, there's this little group of people taking profits, there's this little group of people bucking the system, and they're going to create a tiny retracement in price counter to the underlying trend. We're going to capitalize on it. When everything says up, this is your look on the 5-1, guys. Those large triggers should be strong. Those synthetic triggers should be strong. You should have what's called favorable large triggers. And favorable large triggers are wide in the direction of the trend, not flat and lifeless. Both are up, both are strong like a shark preparing to breach. And guys, them tight, one on top of the other, is going to provide the smallest window of opportunity, the smallest place for that market to continue. But we have to wait for a pullback to identify that window. So on your 5-1 chart, you're going to wait for a reversal bar. After all of those green bars, you want a red bar. It's time for those yahoos to give us that advantage. At the time of the reversal bar, all you have to do is identify your areas, fibs, mid-bands, and one-to-ones. Every trend trade that I teach originates in an area. Fibs, mid-bands, one-to-ones. And they need to be inside of those favorable large triggers. Here I have a mid-band, I have 2 areas of Fibonacci support, and I also have one-to-ones. And they're all inside of those strong, favorable large triggers coming up like a shark about to breach. Your job is to simply right-click on your chart, activate a limit order, buy 2, buy 4, buy 10, buy 1,000. But it goes at the highest point of support inside of favorable large triggers. And it does that because remember, your 13.2 is haul and tail in the direction of the trend, and there is absolutely nothing in the way to stop it. So I'm not expecting this tail or this wick to push down too terribly far. Where the heck is my rule number 3? So my order is going at the top of this window. And if that retracement, that tiny retracement, that pullback against the overall trend reaches my highest point of support, in this case it's a mid-band inside of favorable large triggers, I'm in a long position at 79.21. I bought the market and my anticipation is that the market will go up. And the only reason I'm in this trade is because I have the advantage of momentum from strong triggers on the 13.2. Because I have a clear path, because there's no termination conditions present, and because I've entered at the area where the market is most likely to continue. Guys, there's only one reason to take a trade, and that's because your rules are met. And I'll take this trade 1,000 out of 1,000 times, guys. My initial stop will go below the window of opportunity where the market shouldn't go. 1,000 out of 1,000 times because this is typically the result. 70 to 80%, right? With the advantage of momentum, with that clear path, and you're able to identify where the market is likely to continue. Guys, this is your recipe for success in the very beginning. When you are learning to trade, when you're learning to read indicators, when you're learning to recognize advantages, 2 charts, 3 rules, 1 look, advantages. When your 13.2 has odds favorable momentum, when your 13.2 hasn't reached one of those key areas yet, there's that tail. Remember I said get in the habit of circling tails? If you circle the tail after the fact, if you come back to yesterday's market and you circle these tails with odds favorable momentum, and it lines up with an area of support inside of favorable large triggers, well, now you know that the rules are met for a high probability trend trade. Your job for the first 20 days is to be able to identify this entry and trust it so that you don't hesitate. In a downtrend, there's that reversal bar. From the bottom of the trigger lines to the top of the trigger lines, There's only one area inside. This is the area where the market is most likely to continue. I'm ignoring these one-to-ones because they're outside of the trigger lines. I'm ignoring this resistance because it's outside of the trigger lines. This tiny little cyan box is where the market is likely to continue. Your job is to just keep searching so that you never miss it. Reversal bar prints begins the pullback from the top of my triggers to the bottom of my triggers. Notice that I create this red box after the fact. From the highest point of support to the lowest point of support, from a mid-band down to the one-to-ones, this cyan box represents where the market is likely to continue. Your job is to activate a limit order right at the top. You don't pay attention to this support because it's outside of the window. And guys, this is your high probability trend trade. Remember, you're not trading tails on the 13.2. Your job is not to trade the tails on the 13.2. Your job is to trade the areas of support inside of favorable large triggers, to trade the areas of resistance inside of favorable large triggers on the 5-1. Identifying the tails is an after-the-fact study tool. Don't wait for the tail to form, you'll miss the trade. When the market is all the way up here at the top of this bar, you're making a decision to get in over here. And you can go back and study this, right? You can go back to your 13.2. There's one of those, the area may break, but it hasn't broken yet scenarios. Let's see what it looks like if I circle the tail at the bottom. Here's the first pullback, directly to an area of support inside of favorable large triggers. And then what happens on that 5-1? We get a second divergence with weak triggers. It pushes it back down right into that area of support. And then ultimately that market moves in the direction of the trade. Guys, this is how you're going to study. There's another one. Some will be perfect, some won't fit the rules. Once again, there's a pullback directly to resistance inside of favorable large triggers. The market fluctuates on this smaller, faster chart. But isn't this also a pullback to an area of resistance inside of favorable large triggers? There's opportunities right there. Here I don't have that best trigger look, right? But if I scroll back and I'm patient, eventually I do. Let's see what this one looked like. Guys, this was 4 o'clock yesterday afternoon, wasn't it? These don't present themselves every second of every day. But look at that. Pullback directly to support inside of favorable large triggers. Guys, do me a favor. Give me a Y in the room if you're with me. Your job for the first 20 days is to be able to recognize this entry and to take it without hesitation and not give a flip about the P&L, right? You're only focusing on entries. You're making sure you're looking, is the market coming from a good top or bottom? Is it coming from a termination condition that creates a full reversal? If it is, you're looking for odds favorable momentum on the 13.2. And if you have it, you're making sure there's no termination conditions. And if that is true, you have a clear path, you're looking for an area of entry inside of favorable large triggers. Guys, I'm going to give you 3 documents in the room right now. The first one is this high probability trend trade checklist. Print this out, put it on your desktop, hold yourself accountable each and every time you take a trade. The second one is the exact same checklist, but I stole pictures from the user guide, from your set of instructions that show you exactly what it looks like when those rules are met. Keep this on your computer. Study it every day. Get so comfortable with these looks that it becomes easy. And then the final thing that I put in the room there is an example of how to write a plan. And all you're doing when you write a plan, see if we can make this big and readable, right? Is you're telling yourself, this is what it's going to take to get me in the market, guys. Personalize it. This is my trade. If you come into this room and you try to do what everybody else is doing, the odds of you being successful is going to go down dramatically, because plans originate from your repetition, from your experience, from your study. If I come in with my 2 to 3 years with the software and I try to do what John Novak does with 25 years in the software, guys, that's a what is that? That's a 22-year gap in experience, but I'm trying to be him. It rarely works out. So be your own person. Personalize it. Use the phrase, my trade is. And all you're doing is defining your entry point. What's it going to take to get you to pull the trigger on a trade? There's that same checklist, because this checklist lets me know that 70 to 80% of the time I'm going to find a level of success. 20 to 30% of the time the market is going to run me over and take my money. When you stop expecting to win trades, you start winning more trades. If you only focus on your execution and not the result, what you're going to find is that the execution of a plan that's been proven to win more than it loses is going to work. And now you have to take pictures, guys, over and over. Just like we did in the market. When I circle those tails and it lines up with an entry, take a picture. You are going to fill this spreadsheet that was provided by Nexgen with your perfect look. What's it going to take to get you to pull the trigger? Guys, I have 160-ish, 170-ish high probability trend trades, medium probability trend trades. I'm going to give you my spreadsheet, guys. All I want is for you to be successful. If you haven't done it yet and you're still working on entries, you're still working on consistency, I want you to take my spreadsheet. I just put it in the chat box. I want you to download it. I want you to pop a beer, pour a glass of wine, grab a diet soda, whatever makes you happy. And I want you to click on every one of these. And I want you to look at the entries, and I want you to burn it into your memory. And then I want you to start taking pictures. 15 pictures a day, guys. That should be your goal as a new user. 15 pictures a day. That's 75 pictures a week. That's 300 pictures a month. By the end of 90 days, you're going to have close to 1,000 pictures. You're going to take pictures of your best looks. You're going to annotate those charts. You're going to talk about your rules. And you're going to be able to nail this entry without hesitation every time these rules are met, because you're going to trust it. If you talk yourself out of a trade, you don't trust it yet. Keep studying. If you hesitate, you're still building trust. Keep studying. It's okay. It's a marathon. But take those pictures. And then you're going to have to define a management plan, right? You're going to have to do something with those great entries. In the beginning, a mechanical approach tends to be the most advantageous approach for a new user, something that doesn't require you to be able to read your charts, something that removes emotion, something that gets rid of opinion. And this right here on the trading plan is the most mechanical I've ever seen. Trade 2 contracts, your initial stop will be put into your ATM strategy as 12 ticks. 12 ticks isn't your stop. Your stop gets moved above or below the window of opportunity initially. It may be 8 ticks, it may be 17 ticks, but 12 gives you time to react. Once a reversal bar prints in the direction of your trade, you can reduce your risk a couple ticks below or above that reversal bar. Taking profits at 100, going to break even, getting that quick dopamine kick with absolutely nothing to lose. And then your second target is 200, guys. You're only looking for $300 every trade as a brand new user. Imagine if you take 5 trades a day and you win 3 of them, right? And you make that $900, and you lose 2 of them, and it puts you somewhere around $500. That's a $2,500 week, guys. That's a $10,000 month. That's $120,000 a year, hypothetically, based on the most mechanical approach. And if you allow this to be your path for 20 days, you're going to understand how to read your charts and understand fluently where the market is likely to continue, where it's likely to stop, and where it's likely to go. And the idea is to build a foundation capable of winning consistently, so that you can expand your knowledge base through repetition, through picture taking, through participating in class, and work your way into those other trades that you feel compelled to take. So guys, this is your path. This is your first 30 days. This is the best of the best. These are your advantages. This is your ability to read charts. All you have to do is start snapping pictures, popping them in class, because your step-by-step path to becoming a confident trader begins with posting pictures in class, getting feedback 15 hours every week, live, in the moment. Everything you do, we'll talk about it. The key to getting the best feedback in class, though, revolves around your ability to annotate your charts. Why are you doing what you're doing? What are the advantages that you saw? What are the disadvantages that you saw? How did you feel? Were you nervous? Were you confident? Were you anxious? Guys, let me know, because all of that is very telling about where you are in the learning process. If you willingly forfeited an advantage, talk about it. Go, I knew that there was a termination condition, but because of these advantages, this is why I did the trade, and we'll have a great conversation. But you have to get this picture in class, right? You've got to show me that picture so that we can have the discussion. So there's a picture of how to annotate your chart. And then getting those pictures into the spreadsheet so that you can study it every day. Guys, there's 2 pages for you. There's the trade tracking sheet. Every time you take a trade, you're going to put that annotated picture in, and you're going to say, I followed my rules and I won. I broke my rules and I lost. You're going to create an awareness of the patterns that are bringing you success. But the most important thing, and what I do in this classroom, is you're going to identify patterns in yourself. Everybody has a thing. Some people trade in termination conditions. That was my thing. Some people love areas with the potential to break, but without the advantage of momentum. Some people jump in early. Some people jump in late. Every picture that you post in the class, we're going to identify your thing, and we're going to work together to fix it. And then the second page is burning this into your memory so deeply that you trust it, that you never miss it. That's it right there, guys. Learn the rules. That's my job, is to teach you the rules, to give you the advantages, to show you how to recognize them so you know when it's okay to trade. Your job is to simulate daily, to post pictures in class and practice trading the rules. Don't practice trying to get the biggest number, because that's going to give you a short-term win and a long-term failure. It needs to be repeatable and provide a statistic advantage. Simplify your plan. I say 1 look initially, maybe add a second. What looks will you commit to? You have to learn the rules so that they become easy. You have to know exactly what it looks like so you never miss it when it happens. Then you can go back and replay the day, fix your mistakes, take pictures of the correct trades, and repeat this process every day until you always take the correct trades. Guys, this is your path. It's up to you whether or not you want to follow it. I can tell you that the people that stay this course get to where they want to be the fastest. You are going to learn for the rest of your life. You're never going to stop learning. You're never going to stop recognizing things. But if you use that simple foundation, that 3 rule, that chart reading, you always have something to fall back to. When you begin to expand and maybe you have a bad day, you always have something to fall back to. You always have that consistency to come back into, to make sure that you're comfortable with what you're seeing. What do we see right now? Price reaches resistance. Absolutely no trigger lines have broken through. We're also at a divergence high. Even though the market is pushing, we don't have the advantage of a clear path, nor do we have the advantage of momentum. If you're a rules-based trader, whoops. If you're a rules-based trader, you don't have a trade right now. You're just waiting. Here's crude oil. I'm coming from a termination condition that created odds favorable momentum. Let's talk about a termination condition that we see a lot, guys. This is the gap theory. Happening right before us. I bet somebody probably put a picture of this in the room, recognizing this pattern. Guys, when price pulls away from those large triggers too fast and too far and it reaches an area, price is likely to snap right back. to those large triggers. It looks like this. Let me find a picture. Price accelerates away from the large triggers fast and far. If those large triggers are a full bar away, you'll recognize it because they're below the reversal bar marker, or they're above the reversal bar marker. Guys, this is your cue to sit on your hands and wait for the market to close that gap, because it's likely to snap back and close it. Here it is right here. Even from a good top, from a termination condition that creates a full reversal, price reaches the mid band, resistance, and those large triggers are above a reversal bar marker. Guys, this is what we call the gap theory. And all it means, it doesn't mean go long, right? Because the rules aren't met for a long because we're down. It means that any trades that you attempt between the bottom of price and the top of the contact with those triggers above the reversal bar marker typically get run over. Any trade, look at it. Patterns repeat themselves over and over, guys, 100%. Patterns over and over. And that's what we're going to look at for the next hour. We're going to look at the charts that you guys have posted. We're going to identify patterns in the market. We're going to identify the advantages that they're creating. Holy smokes, look at that. 3 divergences in the same price range. Once again, patterns, patterns, patterns. Guys, I'm going to take 5 minutes. There's news in 4 minutes. When I come back, we're going to start looking at all of your great pictures. We're going to talk about your charts. And we are going to get you guys on the road to consistency through repetition, through participation, and from identifying when the advantages are present to get you into the market. I'll be back in just a minute, guys. If you take a trade, post a picture. If you have a question, get it in the room. I'll see you in about 5. All right, let's get back at it. Man, check this out. Remember we said everything's about patterns, right? So let's talk about all the information, that happened in the S&P right now. I'm going to take a picture because the reality is I don't have to be in a trade to get a little bit smarter, right? One of the things, oh, thank you, Alex. Crude oil. Doesn't matter, right? Patterns are all the same. They work on any time frame, any market. But you're absolutely right. So this is crude oil. So let's go through how many lessons we can have in one picture. And guys, if you get in the habit of doing this, recognition becomes pretty easy. Right here, I have odds favorable momentum. I can come back every day, and now I can recognize, hey, look, that is odds favorable momentum. Here, I can put no triggers through. This is a termination condition, right? There's another lesson, straight from the manual. Rules 1 and 2. Right here, I can identify the gap theory. Price pulls back to large triggers a full bar away. So there's 3 lessons, right? There's another termination right here. And then check this out. I'll put it up here where I have room. 3 divergences, whoop, forgot a G. In the same price range is a term. The only small chart termination condition that I'm looking for. Guys, if you're a brand new user, I want you to get in the habit of taking pictures like this. And I want you to share it. Share it in class. Reinforce that you're seeing what you think you're seeing, right? We'll talk about it each and every day. But one of the things that I've found is everybody wants to get better through trading, right? This little bit of study is a lot of information, isn't it? Go to your spreadsheet and put a link in there with that picture and just call it 4 lessons, 1 chart under chart reading. Come back and take a look at it, study it. The act of going through and typing this out, the act of going through and identifying when it's not a live market, right? When it's after the fact, when there is no anxiety, when you're not in a trade. You're reinforcing the great rules. You're reinforcing the looks. And the more you see something that isn't moving, the more often you see it without the threat of loss, the easier it becomes to recognize, right? What do we have here? We have weakening triggers. There's 1 loss of momentum. Here comes a potential second loss of momentum. This is a potential medium probability trade, right? But it doesn't give you that high probability trend trade scenario. So guys, I'm going to go through right now, and I'm going to scroll up to the very top. And we're going to start looking at what you guys have done. Guys, I want to remind you that when I'm scrolling through and looking at what you're done, I've got to go through the last hour and 20 minutes. And I'm going up and down, up and down, up and down. I'm coming back trying to answer your questions. So if for some reason I miss a post, if for some reason I miss a trade, just tell me. Just go, hey, Mark, man, I had one over there at about 7 o'clock. Will you go take a look at it, please? All right, Joel, you're starting us off. Market replay, do you see this? Going back, practicing, trying to get better. I love that. What a great thing to do. Joel, you say no checklist, don't know what kind of trade it is. And then Joel, respectfully, stupid, stupid. You're going to believe it. If you keep typing it, you're going to believe it, right? Guys, make mistakes. Mistakes are part of the learning process. If I started calling you guys stupid, you'd call my boss, right? John, Mark keeps calling me stupid in the room. If I can't call you stupid, you can't call you stupid. Please. Focus on your language, guys. I'll call you stupid privately. Not really. I won't. But when you start using this language, you start believing it. I firmly believe that. Joel, you have odds favorable momentum. It's coming from a termination condition, right? You're a tick off of support. You're very close. But you have a perfect entry inside of favorable large triggers with a tiny window of opportunity. And everything about this 13-2 was pushing down. Joel, you forfeited one thing on this. You forfeited the clear path. But you had a mountain of advantages beyond it. It's a medium probability trade with a perfect entry that created a manageable trade that was low risk. Is it stupid, Joel? Or if you come back and look at it, termination conditions strengthen it. Momentum gives it a fighting chance. Perfect entries create manageable trades. You took a medium probability trade with a great result, and all of this momentum said that you were probably going to retest support. So without the anxiety, without the fear of loss, isn't it easy to go back, take a deep breath, and go, oh my gosh, this wasn't as bad as I thought it was in the moment. This may be a trade that I could manage and make money on. And Joel, I want to show you a great thing. And guys, here's some chart reading. You're going to love this. I call this the Paul pattern. So if you're in a trade, right, and you have every advantage on the 13-2, I want you to see something. The market goes up, gives you an entry. The market comes down and divergence prints, right? The expectation of one divergence with all this momentum is to create a pivot stop out right here. And if you're creating a pivot stop out inside a window of opportunity with all these advantages, man, that to me is a great reason to stay in a trade. If your potential pivot stop out is going to happen well beyond that window, maybe not so much. But it's only one tiny loss of momentum fighting all of these advantages. Pretty cool, right? Guys, this is why you have to go back and restudy your charts. Everything that you do today, you need to study tomorrow. Because when you're not in the moment, it becomes easy. But I want you guys to do me a favor, and I know this sounds preachy and I sound like your grandma talking to you, right? I want you to lose all of this negative BS that gives you a horrible state of mind. Especially if you're on simulator, guys. Make every mistake that can be made and then just go back and reanalyze it and see where the great lessons are from it, right? And let me show you. Joel, we got another one, right? Let's see what happened here. Joel, I love your charts. There's a termination condition that creates a full reversal. There's odds favorable momentum and everything coming down, right? Absolutely beautiful, beautiful, beautiful. And then after the fact, we're going to do it again, guys. We're going to go through emotionless after the fact. Joel, did you have an area inside of favorable large triggers? What do you think? In the moment when you missed the trade, you said no. Absolutely you did. But you know what happened, Joel? The market's a jerk, and you didn't get filled. It stopped a little bit shorter of your best of the best entry, and it went without you. And it said, you know what? This isn't Joel's money today. But Joel, you had the perfect trade. You had the perfect read. You had everything. Just because it doesn't reach the area doesn't mean that it wasn't there. It just didn't get there. Joel, that's 2 beautiful charts this morning. Celebrate them. Celebrate your successes, guys. Don't focus on your negatives. Safia. Let's see what Safia did today. She says this was a medium probability trade, which I love. Because what it means is that Safia understands that she may have to manage aggressively, right? She has a strong trending market, without a doubt. She has a clear path. All of the trigger lines are above support. And she has an area of support inside of favorable large triggers with no divergence on the 5-1. Safia, you have taken a medium probability trade with a truckload of advantages, and your small issue is that these trigger lines aren't screaming outside of the large. One small issue, one perfect entry, and you said that you accidentally got closed out. Did you hit close? Were you hovering over the close button going, oh, you hit sell? I got you. Great trade, Safia. Beautiful. Isn't it nice to make that mistake on simulator, though? You'll do it live, too. Excuse me. I'm so sorry. You know it's fun? And guys, I'm just telling you, trading is one of those things. My favorite thing is to open up charts, to get ready for the day, to find all of those advantages and take the best trade ever and make $1,000 and then look over and realize that I'm on sim. Ha ha! There it is, Paul. You're all going to do that too. Guys, it's just part of it. Keep smiling. You're going to make mistakes. Post them in the room. Let's talk about them. One of the greatest things in the world is to think you made a mistake, post it in the room, and find out that you're as smart as you really are. So let's go through. Here we go. Termination creates a full reversal. Not odds favorable momentum yet, right? Because those large triggers are still down. So not yet. Not a trade yet. Now those triggers are starting to roll. But that area isn't inside of favorable large triggers. Not a trade yet for those high probability trend traders. Not a termination condition yet, right? Because on this tail, we hadn't reached resistance. But there's no area for entry, so no, there's no harm in not getting in. And then here we have one of those 50-50 trades. One of those small triggers are through, the large triggers are not. So not a termination condition, but not a clear path. And then Joel, you circled your potential entry right at the top of the window. And there's your second potential entry right at the bottom. Joel, your ability to read charts is phenomenal. I want you to know that. You're a chart reader. What you have to be able to say after the fact is that right here, rules weren't met. Right here, rules weren't met. Right here, could have taken a shot, but it's a big window of opportunity. I have to be mentally prepared to put a little extra risk on it. Great reads, Joel. Just chart reading, right? Guys, there doesn't have to be an entry on your chart for it to be an amazing lesson. All right, Gary. And guys, let's, Gary, props, man. Great day yesterday. All sorts of money. Good luck on that NASDAQ. If you have any hesitation about your plan, it's going to kill you. So be aware when you're trading NASDAQ. It's like your cousin that does meth and drinks coffee. Termination creates a full reversal. Full reversal gives odds favorable momentum. 50-50 trade coming into it. No divergence, window of opportunity. Nice entry. One divergence. Guys, there it is again. Let's talk about patterns that repeat themselves over and over. I'm going to call this one the Pineski because it makes me laugh. One divergence with all that momentum. Look at that. There's your little pivot stop out right in an area inside of favorable large triggers. Gary is a good hold, man. And then you get back up to that area with the potential to break, and you said, I'm just going to go ahead and get paid. I love it. Great trade, Gary. The Pineski, one divergence with tons of advantages, creates that little pivot stop out, creates a management opportunity. I'm having fun today, guys. Scrolling down. And then, guys, once again, I see in the room, I passed 10 Apex accounts, trading a plan, sticking to a plan. Somebody put it in there, asking some questions about it. Scrolling down a little bit more, looking for pictures. And then someone else told me that they passed their Apex account by keeping it simple, by not forming opinions. Medium probability, 50-50 trade coming from a termination condition. Perfect entry. You took the trade at the mid-band, usually a winner. You managed out break even. I'm not sure why. Guys, I don't throw stones, right? But things that make me nervous. I didn't see divergence. Why does this make me nervous? Well, because if your rules revolve around this divergence, it terrifies me that the market can print 7 bars and you not notice a magenta line above every one of them, right? And Gary, I'm not saying you did this, so please don't take it as that. But what I find is that when people say, I didn't see, what it means is they chose to ignore. Because I'm sorry, that's hard to miss over the course of all of this, isn't it? All right. So even when I'm sleepy, I can see a magenta line. That's okay, though. But I'm saying be aware. If you just ignored it, and I'm not saying that you did, Gary, because I've done it. I've put didn't see when what I really meant to say was I couldn't care less about it because it meant that I didn't get to get in a trade. Make sure that you're honest on your annotations because you can lie to me all day long. I don't care. Doesn't matter. But when you lie to yourself, you're going to create the scenario where you start believing you. Just like when you talk down about yourself, you're going to create a scenario where you start believing your lies, your deception. All right, Joel, let's see what you got, bud. 50-50 trade, right? Medium probability, a little bit of divergence, perfect entry, and it gets stopped out. Joel, do you notice that you said that you broke your rules, but you didn't write your rules on the chart? Which rule did you break? Why do I bring this up? Guys, once again, annotations create awareness. Annotations help you understand what you did. So Joel, if this was my chart, I might put divergence prints. My rules say no 50-50 with divergence. And all I've done is I'm not beating myself up. I'm not doing anything other than saying, you know what? I got a little excited and I made a mistake. But I see it. I'm cool with it. I'm going to grow from it. I'm going to show it to Mark, and Mark's going to say, man, annotate the chart. And Mark's also going to tell me that coming from a termination condition, that look in this entry is an amazing entry. It's just not a high probability trade. Yeah. Joel, you're great, dude. I could teach a class on perfect entries in great conditions off of only your charts. Guys, it was a medium probability trade that didn't work. It doesn't mean that you did something wrong unless you broke your rules. It just means that it didn't work. That's it. Oh, you guys are going to make me pull out the Mark Douglas. Ready? My favorite, absolutely favorite snippet of brilliance from Mark Douglas is this right here. When you stop expecting to win every trade, you'll start winning every trade. Not winning every trade, you'll start winning most of your trades, excuse me. To stop caring about the result and focus on the execution, guys, it takes a lot of pressure off of you, because when you believe that you should win, that's when you get that emotional response when you don't. All my math people, if something's winning 70 to 80% of the time and I take 100 trades, how many trades can I expect to lose? How many trades should I expect to lose? How many trades should I be mentally prepared to lose? How many trades should I be financially prepared to lose? At least 30, right? And I have absolutely no say in when those 30 come. I have absolutely no say on how many winners I take in a row, how many losers I take in a row. And if I take 5 losers in a row and I hit my stop loss for the day, that's cool. Dude, I did it twice last week. I had 2 days where I hit my stop loss in 3 trades, had to stop trading, and firmly believed that the next day I had my 30% out of the way and it was time to hit my 70%. And I did it 2 days in a row, guys. Not going to lie. 2 days in a row I hit my stop loss last week. And on the 3rd day, I still followed my rules, because my rules work, because my rules win more than they lose, and because I don't gauge the success of my plan on 6 trades. I gauge it on 60. All right. Termination condition, no trade. Look at this, even multiple divergences coming from the termination condition. And Gary said this market flow signal means absolutely nothing because the rules aren't met. Gary, I love this chart. I actually like this one so much, I'm going to steal it. Gary, you put so many great pictures into this classroom, and I don't think I take enough of them for my spreadsheet. So I'm going to call this, watch this, end of term, no trade. What a concept. Rules not met. Putting you in the Hall of Fame. Great picture. Great picture. Guys, take pictures even when the rules aren't met. Double top and a termination condition. I don't even worry about double tops. Isn't this cool though, Gary? Again, I'll send you a royalty. I'll send you a White Castle gift certificate. Gary is saying that support held and resistance held, and he's just going to wait for the areas to clear. He's going to get out of this Fibonacci-induced range before he's willing to risk his money. Brilliant. Absolutely brilliant, guys. Everything is advantages. All right, Paul, let's see what you did. Paul. Oh, and we did this one live, didn't we? I knew somebody would post a picture in here of it. Let me bump this up. Check this out. Large gap, don't trade, gap theory. 2 divergences, pushes to the highest point of the window. Pretty common theme. Guys, the Pineski. Your ability to recognize patterns comes through repetition, right? That's Paul's picture. Where's the one that we did? I've got the after picture for Paul's picture. Right there. Pretty cool that Paul and I are seeing the exact same thing, right? Guys, there's a basic understanding of patterns that creates advantages that puts you on the path to success. The more you focus on the patterns, the more you focus on the process, typically the faster success shows up. All right, I lost my place. Let me figure out where I was. There we go. Alan, it's your turn. Let's see what you did, Alan. Holy smokes, big 34-5. Not looking for moves down. 21-3 says termination condition. Not looking for moves up. 13-2 says termination condition. Not looking for moves down. 5-1 never gave a good setup. Too big a risk to take it. Whew. Alan. Great chart reading everywhere. You want to see something awesome? And this is just me. 50-50, whoops. 50-50, gap theory, no trade. 2 charts. Pretty easy, right? Same result. $34.5 says more down. Doesn't it? 34.5, you put that yellow line there, I'm assuming. This is a bad bottom, directly into resistance with absolutely no triggers and a gap theory to the downside. 21.3 says coming from a good bottom, odds favorable on the upside, but no clear path. These two contradict one another. Isn't it difficult if your first 2 charts contradict each other, and then this contradicts this, other than the termination condition? One says strong up after the gaps filled to the triggers. One says down after a termination condition. That becomes difficult, right? Which one do you believe? And then the 5-1 gave you an area of resistance inside of favorable large triggers on a 50-50. So you can use whatever charts you want, right? But man, I love simplicity. Ended up thinking you were looking for small moves. And it's cool. I like a 21. If I know, and let me show you how I would use a 21, or how I do use a 21. If the 21 is at a solid termination condition, right? And I have a 50-50 over here, and I'm trying to decide whether or not to take that 50-50 into a termination condition, the 21 may be helpful, right? If I am going, well, I've got a 50-50 on my 13-2 to the downside, but my 21 is screaming up off of a good bottom, maybe this isn't the most advantageous. So I'm cool. I use a 21 in my own trading. I really do. Yeah, but what I end up doing, Alan, and I'm not saying that you do this, guys, all of these silly little stories and observations come from my own mistakes. They really do. Is if I really want to go short, I'll ignore this one, right? But if I really think that I want to go long off of the mid-band, I'll embrace this one. The 34.5 will keep you out of everything. It's too big. Too much happens. Too much happens on a 34.5. And if this one says up, I'll ignore this one because I really want to go short. So for me, my own personal experience, the more options that I give myself, the easier it is to talk myself into breaking my rules. Some people find that to be true. Some people find it not. Ziba, you said you're not seeing the advantages. You know what I always tell people when they say, hey, there weren't any trades? You guys ready for a great study tool? Ziba, go back. Encircle. Uh-oh, we got a face change there. New picture. Go back and circle. And if you can't circle a tail with odds favorable momentum, no termination conditions, and an entry inside of favorable large triggers, great picture, Zeba. I love putting faces to names. It makes me happy. If you can't identify through scrolling back advantages, well, then you're probably right on about not having any. And sometimes the market just doesn't give them, right? So whenever I'm watching the market and I say to myself, gosh, just there hasn't been anything, I'll scroll back and I'll see if maybe I did miss something. Because then I can study it without the pressure. And I might say to myself, well, while Mark was talking, I had odds favorable and no termination conditions and a pullback to support inside of favorable large triggers, and I've already established my risk. And shoot, I've already made $100 and I'm break even. Oh, right on, Ziva. And that's okay. Whoops. Guys, do I have odds favorable momentum? Will you guys help me out here? Do I have odds favorable momentum? Give me a Y or an N in the room. What do you think? Smalls are above the large, large are wide, they're angled. What do you think? Yeah? What about termination conditions? Do I have termination conditions present? No? What do you think, guys? Did I have an area inside of favorable large triggers? What do you think? Did I? So guys, is anybody comfortable saying that we just had a trend trade, a high probability trend trade? And since there was a reversal bar, I already know where my risk is, right? I can't see the market right now. I don't know what's happening. Guys, what's the likelihood that this is going to be a successful trade? 70 to 80%? Is it a rules-based entry? Guys, I'm contractually obligated because of my plan to take this trade every time it sets up. Because my plan... Oh, it's not, is it, Paul? Thank you. I was looking at that wrong. You're right, Ziba. It doesn't fit the rules. So it's a medium probability trade. One small issue exists. Thank you for that, Paul. And Ziba, thank you for noticing that. I missed it. Right? Guys, I teach the class. I missed that. So it's medium probability, which means that I have to manage assertively. And what does managing assertively mean? Well, maybe I get a second lower divergence, the Pineski, to take out the previous pivot. But I've probably already made money on a medium probability trade. So guys, that's a great lesson there too. Everybody makes mistakes, right? I just made one. I didn't read my triggers right. I got so excited about a clear path and odds favorable and areas likely to hold. I would have broken a rule there. Actually, I would have taken this trade all day long. But, Ziba, that's not true. I form opinions just like you guys. Guys, I have bad trading days. I make mistakes. I get emotional. Maybe I'm a little sleepy. Guys, I'm human. Just like you. And I was telling somebody via Skype this once. Do you know why it looks like I'm so damn smart? It's because I've seen these patterns so many times and I'm looking at your charts when they're not moving. I've studied these patterns and taken so many pictures and had so many conversations and burned each and every one of these things into memory so many times that when you show me a chart, it's easy for me to analyze. The same way it will become easy for you to analyze. I told that same person, you could teach this class. And I think it was Paul and I talking on the side. I said, you could teach this class. All right, Gary. Anything can happen triggers. Not through the areas, but no divergence. You get in at the best spot, make quick money. Medium probability trade, right? You had a good top or bottom. You waited for it to clear that area that you identified, and you said, this is a good shot at being my breakout, and you were willing to take a shot, and then that divergence prints, and you held it a little bit. I like it. Gary, that's a nice trade. Nice execution. Oh, Folger, get out of Dodge with this nonsense. Odds favorable. Everything says up. Hey, check it out. There's that pattern again. Pivot stop out here creates a pivot stop out here, doesn't it? You were outside of the large triggers, but man, that right there, based on this pattern, I like that one. But what started it? Look at that 13.2. Holy smokes. It is cranking in the direction of the trade. Every trigger line is up. Smalls are outside of the large. I love this trade, Folger. But because it's medium probability, what happens if you get a third divergence? Are you going to manage it? Especially from a weak bottom? Perfect. Guys, that's all you can hope for, right? To have enough things in your favor to feel confident taking the trade. All right, Paul, let's see what you did. Guys, this is my favorite part of class because every time you guys post something, it's a lesson for everybody, right? And you're seeing people in real time using these things the way they're intended to be used, using that chart reading. Whoops. So Paul, let's see what's going on here. Termination creates a full reversal, odds favorable. And look at this, 13.2 kept reloading for trend trades. Look at that. What a great way to start. No divergence. Pulls back to the area. Beautiful entry. Let's make some money. Second profits. 2 divergences. Holy smokes. There's a pivot stop out at resistance inside of favorable large triggers. Getting in, double dipping, making money. Pulls right back to the mid band again. Everything says down at the small triggers. Making money again. Oh my gosh. I'm changing your username from Pineski to the Professor. Great trading, Paul. I mean, wow. Guys, it's all chart reading, isn't it? And the most important thing, and Folger, you did this too, the strength of the 13.2 leads the way. That clear path leads the way. And then all you're doing is looking for entries where the advantages are had. Outstanding. Got a little giddy. Hey, good morning, Tammy. Let's see what you did. Tammy, 50-50. Perfect entry. And you got out because you weren't comfortable with the rules not being met. You know what? I love that you put this on the chart. So 50-50, one divergence, everything strong, support everywhere. That's a tough one to hold because it already gave you a reversal bar. So in a perfect world, your stop's right there and it dings you anyway, right? That's okay. It's a 50-50. We manage assertively. And if you're not comfortable, it's better to exit with a couple ticks than hope. Don't teach your body to hope. And then it keeps going up and it keeps coming back, and you're kind of caught in that range a little bit, right? No divergence, and it pulls all the way back to that support. And it just pulls to that lower area. These guys were range bound. That one's a little tougher look because your large triggers are turning against you. But ultimately, every chart set up. The support that said it was going to hold held. A lot of people, Tammy, get caught up and take a lot of losers in chop like this. When resistance holds and support holds, you get this little trouble area. And if you're entering at the edges, you have a better chance for success without a doubt. I think you did a good job in those circumstances and with everything going on. Gary, weakening triggers, two divergences. There's your pivot stop out at support at the bottom of it, right? Medium probability. You're giving away momentum twice, but you do have a clear path. If you decided to take market flow, you could take it. But with two divergences, that push lower, you can't confirm anywhere. That's not a bad one to sit on your hands. Remember, one small issue exists, right? All day long. Nice trade, Paul. This is the one that we talked about, right? Odds favorable, clear path, not in the area, not inside of favorable large triggers. One small issue, a boatload of advantages. Great trade. It'll be fun to see how you guys managed it. Mary, good morning. Nice to see you in the classroom. 50-50, right? Small's below the large are wide, they're angled, you're coming from a termination condition. A metric truckload of advantages. One divergence, so you said no trade. I love it. Way to follow your rules. Mary, you want to see a good tiebreaker? One of the things that I think about when I have a 50-50, there's some questions that I ask myself. And stay consistent, right? Stay consistent. Things that I ask myself on a 50-50. Guys, I'm going to share a little bit of my mindset. The first thing I ask myself, whoops, that's too small. And we're going to annotate this chart. And I hope this proves helpful for some of you. Where is it coming from? So I'm asking myself, where's it coming from? Because if it's coming from a termination condition that creates a full reversal, that gives me that insane amount of momentum, that's a plus, right? I also ask myself, are my triggers strong on the 5-1? Meaning, do I have that same odds favorable momentum? If I do, that's a plus. And then this is where this 8 range can help you as well. Are my triggers strong on the 8 range? Absolutely they are. So I have momentum on every chart, right? That's perfect, yeah. So analyze where it's coming from, and I think that that's a key factor. And this one also had a high volume area right at the area where it was likely to hold. And Mary, if you're not taking 50-50s with divergence, I'm totally cool with that. That's taking away an advantage on an area that's not broken. Things that I take into consideration, where's it coming from? Because termination conditions that create full reversals tend to create an advantage. And what you'll find is, check this out. We'll find an example of it somewhere. Well, and there's a 50-50. That may have had divergence, I'm not sure. 50-50s that come from a bad bottom, not from the area, I find tend to work less. So where it's coming from, just maybe something to add in. Don't change your plan because of something that I said, but it becomes a good study point, going in and taking a look and determining if it's something. Yeah, I love study because we have that opportunity to just study all the time, to keep looking at patterns, to keep taking pictures. And then, of course, my offer is always on the table. If you want to study those pictures, post them in class. We'll have a conversation about anything and everything that you're doing. And that goes for everybody, guys. When you're building a plan, take advantage of me being here, right? Safia, everything says up. There's a clear path. Look at that entry. Holy smokes, I love it. In at 110.25. $300 in the bank. There's another. What a beautiful trade. 635. Don't make fun of my math skills, Safia. I was an English lit major. Oh, now it's 637. I can't even trust you anymore. The lies are all over the place. Beautiful trade though, right? And identified as medium probability. I love it. The honesty with what you have. Guys, it's great. Because when you know that it's medium, you're totally cool taking profits right before that trouble spot. Beautiful trade, beautiful execution. I love everything about it. Folger. 50-50 on a pivot high. Is that a 21? All right, so potential termination condition. But your 13-2 says giddy up, right? Perfect entries make for easy trades. And then do we have the after? Let's see how you managed it. Same way. Let's just take money. But Folger, don't get caught up on ticks, right? They're just ticks. A tick is one fluctuation. One fluctuation. There's going to be 16 ticks in one bar. You will drive yourself nuts. But check this out. Medium probability perfect entry creates a manageable trade. On a medium probability trade, I can identify my first trouble spot. It's going to be these one-to-ones, right? Or this divergence high. What a great place to take profits. With this much momentum, I'm going to let it get there because my 13-2 leads the way. This is that management lesson, right? Great entries create manageable trades. Is there anything about these triggers? Let me make them intense for those of you learning to manage trades. Is there anything about these triggers that says worry about a little fluctuation on a single bar on a tiny little chart that's just an entry chart? This was a lesson that I had to learn for myself because I traded ticks once I got in because it killed me to see my P&L go down. Oh my gosh, I was up 100 and now I'm only up 50 and holy smokes, I'm going to have to get out of this trade. And I completely lose sight that my 13-2 said, man, look at it. Get to the trouble spot. We're cool. And now it starts to change, right? Now we start to see three divergences in the same location. Now we start to see weak triggers. Comite. And we'll see what happens based off of that. I'll put my indicators back on though. I paid good money for these things. I'm going to use them. Great trade, Folger. And remember, every great entry that you guys take has a management opportunity, right? Almost anything can happen. And Gary, I was almost good looking. But I can't go through life on that almost. Smalls are outside of the large. medium probability, perfect entry, taking profits all the way up to the treble. I love it. She did it one time, right? No. Got a face for radio, Paul. But I'm as charming as all get out. Gary, beautiful trade, great execution. Nice job. Joel, let's see what you did. Joel says it's medium probability, but great entries create manageable trades. Joel, perfect. Perfect, perfect. Thank you, Ziva. It's all done with smoke and mirrors. There was a time. I used to be a handsome fella. Then I got old. Joel, you should be doing the yay me dance. You should be erasing every negative thought that you have in your head because you're 5 for 5 today. You're killing it. Gary, look at that termination condition. It's just a number. I'll tell you what, I'm 51 next week. My 50s have been my best year yet. I'm having more fun at 50 than I ever did. And the 40s were pretty good. Guys, who took this picture in crude oil? Who said I have a termination condition? And because I had a termination condition, my rules weren't met. And because my rules weren't met, I'm not taking a short. And Gary says a termination condition. He's looking at that HVA line, right? Safia, you've had a year. It's okay. It's going to get better and better. You guys are stuck with me, so that's a pretty good thing. Gary, great chart reads. Great job. I love pictures. When there's nothing to do, what would you guys annotate this chart with? Let's take a picture together. Let me tell you what I see. I see a pretty good trigger look, right? I see a clear path. Thank you, Safia. But I also see 3 divergence in the same location, which says even though this is screaming yeehaw, your 5-1 says, hey, pump the brakes, Mark. We're probably going to push a little lower, and you don't know if it's there or there or there. Hell, you don't even know if it's down here. Guys, this is a great small chart termination condition helping you identify change on the large chart. So I'm going to save it to screencast. Here we go again, right? Mark taking pictures. Why does he take so many pictures? Because my goal is to make money. And the more pictures that I take, the more patterns I recognize. Small chart termination condition. Guys, I hope that you steal this one. There's more fun living in the 60s than living in your 60s. Once the warranty runs out, the parts start going bad. You know what, Ron? My warranty ran out 20 years ago. I've got more hardware in my back than I do in my toolbox. They say it's not the age, it's the mileage. And I'll tell you what, if you watched a movie of my life, my mileage is high. But I got great stories. Guys, is 4110 likely to hold or break based on what we know about termination conditions? What can we say about this area of support that prices retrace to? How many trigger lines have broken through it? It has the potential to stop the market, right? It doesn't mean go long arbitrarily, but if you're the kind of person that loves patterns, you might say a change of momentum on the 5-1 might warrant looking for continuation up. But there's no trade to be had yet because there's no rules. All about the mileage. What's going on in crude oil? Anything fun? Gary, there's your termination condition, right? And it took you straight up to a midband. You reach resistance. Absolutely no trigger lines broke through. CS and morphine pain pump in your back at 64. Lookout 70. Yeah, Joel, you're just getting started, man. I'm not sure what SCS is. But man, I don't wish back pain on anybody. Gary, great picture. 3 divergences, change in trend, right? So, Alan, are you with me? Oh, the stimulators. I've heard those are great. Alan, remember when we were talking about all those big charts? Do you have an S&P 21? Was your S&P 21 strong up with no termination conditions? Will you show me a picture of it? I'm going to teach you guys how to use a bigger chart in situations like this. Jose, everything says up after a good bottom. No trigger lines through the area. So into a termination condition on the 13.2, fighting odds favorable momentum on the 21. Right? Termination condition on the 13.2. Fighting the momentum on a 21. But let's go through this. What do we see? 50-50 from a bad top. This is an area with the potential to hold, right? That's a low probability. 50-50. And here we have a termination condition that lines up with a bad 50-50. And we have odds favorable. And we have support. What do you think, Jose? Is that one worth taking a shot at? Or do you prefer to get a pullback maybe to those synthetics a little deeper? I think you could make a case for it. It's definitely not high probability, but a little bit of chart reading, right? Trickle down theory. 50-50 less likely to work because of where it comes from. It comes from a bad top. Termination condition on the 13.2 suggests that the market may reverse. It does. It provides odds favorable. No divergence. Into support. I could make a case either way, but I would manage the hell out of this trade because it's not high probability, right? Because none of my trigger lines broke through that area. And then that divergence kind of sours the mix a little bit more. That gap theory. See how you can do that? I can talk myself into anything. I can talk myself out of anything. So where was your 21? Your 21 had odds favorable momentum, but it had a termination condition. Alan, if I didn't have this potential termination condition on the 21, that might be a good look, right? See how you can do that? But because you identified a trouble spot on the 21, you take your first medium probability, but when things change, when things change and it goes all the way down, it creates that opportunity through chart reading to make good decisions. Look at that termination condition. Holy smokes. And Jose, that's why if you take this one, you got to be prepared to manage it aggressively. And you also have to be prepared that this one may not work because of the challenges, right? One small issue is okay. When they start compounding, it would have worked right up to where it didn't, right? This is coming from the termination condition, Mary. It's It's coming from a pivot stop out that's not in an area. Remember, when these come from an area, it adds a little strength to it. But this termination condition is only solid right up to the next termination condition. Oh, you had a picture. Right here? It's a good look. Wouldn't you agree? That's a termination condition that creates a full reversal, but we're still 50-50. And Mary, let's do a couple different things on this one because I know that you're studying and I like that you didn't take the trade. So let's talk about it. One divergence creates a loss of momentum, a little bit of a disadvantage, right? Two divergences creates even more of a disadvantage. That's two losses of momentum. What else do you notice here? Not only has resistance not broken, but your large triggers haven't made it through this area either. So you have areas with the potential to break that's this big. Two areas that haven't broken. Two losses of momentum. And like you said, that second loss of momentum is coming right off of a one-to-one pivot, which means that the reality is you're going to expect it to at least take out this pivot, right? The Pineski, have you been paying attention? And what's below that pivot? Look at that void. Nothing there, right? Nothing to create a bounce. And Mary, I'm sure that when you chose not to take this trade, this is exactly what your brain did, right? It said this creates a problem, this creates multiple problems. And I think that, guys, that recognition that a pivot stop out typically creates a pivot stop out. And if you don't have a rock solid area right at that pivot stop out, it's not even worth considering, is it? Mary, this is a beautiful read and a great job not taking a trade that really had a lot of problems. And the better you get at chart reading, guys, the quicker all of this is going to come into place. Like, it's going to happen fast. Nice job. Gary, did we see this one already? We sure did. Pivot stop out. You took the median probability and managed it amazingly. And guys, I think we've made it through all your pictures. Guys, I'm going to take about 5 minutes. My son called. I'm going to call him back. When I come back, we're going to get in the last hour. If you have questions, post them. If you have pictures, post them. If there's a subject that you want to talk about, let me know. The last hour belongs to you guys. I'll be back in just a minute. I'm back. Last hour. Jerry Springer died. Oh. You know what? 79 is a good run, isn't it? That guy was something else. No more Scream TV. How are we looking here, guys? Termination creates a full reversal. Full reversal creates odds favorable. Odds favorable. Whoops, what did I just do? There we go. Odds favorable. I wonder if I got a reversal bar, if I could identify an area of resistance inside of favorable large triggers. Guys, is this pivot stop out? Do I have a clear path? Or do I have an area with the potential to break based on odds favorable momentum? What do you think? Ah, Jose, you caught the first one. Termination condition. Everything points down. Rockstar entry. Nice job, Jose. That's a great trade. That's a chart reading trade, isn't it? That's a pattern trade. What's the pattern? When a bottom doesn't come from a Fibonacci area, remember we talked about that? A pivot stop out is good. It's a termination condition. But a pivot stop out's better when it happens at a fib. Because a lot of times it'll pull back and finish the move. Here, Fibonacci, kablam, all the way down. And that 50-50 pulls right back to resistance, which means the trigger line started breaking, pushes right down, doesn't get to the next key Fibonacci area, pulls all the way back, triggers don't follow. Where are we going? How do you guys feel about 7407? Can I use my chart reading to determine where the market is likely to go? Not guaranteed to go, not absolutely gonna go. I used to think John Novak was a wizard when he would do this. Market's trending down, doesn't reach a key fib, pulls all the way back to the mid-band, triggers don't follow. Market loves to finish the move, right? Jose, based on this pattern, every chart agreed with 74.51 holding for continuation. Beautiful. And that was it, right? No divergence. Jose, I'm clapping over here. Nice job. And if you stayed out because of the divergence, Paul, that's cool, right? Termination, full reversal. Small triggers are strong, but they're not odds favorable momentum yet. And we know that we have a problem. We have an issue. No divergence, strong triggers, and it pulls right up to resistance that's likely to stop the market based on trigger line's location. What's cool is sometimes you're going to accidentally catch the most beautiful trade in the world and not know all the great things about it. That's one of the things I love on this class. So what am I waiting for now, guys? I have smalls below the large. My large are wide. They're angled in the direction of the trend. I haven't reached an area. We'll see what happens. I don't know what's going to happen. I never do. 3 divergences pushes us all the way back to support, all the way back to the mid-band. All right, guys, let's talk about it again. Where am I coming from? Good top or bad top? Strong top or not? Not. Absolutely. I agree 100%. If I'm not coming from a strong top and I've reached a mid-band and support and my large triggers are still all the way up here at the reversal bar marker, what is the potential to happen here? Do you guys remember the gap theory? Is price likely to come back to 41.10? Or is it more likely to rail through this area coming from a bad top? This is my thought process as I begin weighing things out. Because what I'm seeing now is I don't have a termination condition. I've got a divergence. When divergence prints from a bad top, my mid-band's my first goal. I'm into a termination condition at support. My large triggers aren't following. They're above 1, 2 areas. Now I don't have divergence on my 5-1. And there's my window of opportunity if I choose to trade into divergence. But if I'm going off the same pattern that I just saw in crude oil, large triggers don't follow, support, bad top, I would be inclined to say, in what's been a pretty good uptrend today, oh man, there it is again, that market may want to continue up. And this is where, Alan, I would consult a 21.3. It's a patience piece right now. That's all it is. It's a patience piece. Some of you are going to say, to hell with it, I haven't traded in a while. I'm going to take this trade into a termination condition from a bad top. Doesn't fit my rules. It either fits your rules or it doesn't. Only you can answer that question. But if you write your rules on your chart, you got a better chance of knowing what it is you should and should not be doing. So guys, we're going to talk about the learning curve. We're going to talk about your path to success. I talk about this every day, guys. This class is the same class every day, isn't it? The only thing that makes it different is when you guys post charts, when you guys ask questions, because I will adjust my syllabus instantly to make sure you get the answers you need. So remember that. If you want to see class go a certain direction one day, all you have to do is ask your questions. But to minimize your learning curve, post your trades in class. Pictures of your trades in class every time. Every trade, win, lose, or draw. Some of you don't want to show me your losers, right? Hey, Mark, look at this amazing winner that I took. But you forget to hide your P&L that says after that $700 winner, you're still down $100. Guys, I know you took a loser. Show me your loser. Let's figure out why. Did you break a rule? And if you broke a rule, I don't think less of you. I'm not like grandma that's like, I'm not mad, I'm just disappointed. I want to take that mistake and I want to turn it into an opportunity for growth, right? So every trade, win, lose, or draw. And if you win and the rules are wrong, you may have a short-term victory, but a long-term failure. How are you going to know the difference if you're brand new? You need feedback from me or from us, me and the mouse in my pocket. I'm here to help, guys. 100% committed. If you place a trade on the simulator or participate in class, there's no risk of loss or capital, guys. You're playing with monopoly money. If you are terrified to take a loss on simulator, what's going to happen when it's real? That pucker factor is going to go up exponentially. So you're getting comfortable and confident and feeling smooth. If your palms sweat when you take a trade, you're not 100% sold on your plan yet. The trust isn't there. If anyone do this, this was my thing. If I get into a trade, I'll start doing this. Oh, what's it doing? Oh, I'm over here. Maybe it's there. Crap, I lost it. Maybe if I give it room for that short to work, it's going to work better. And I start trying to manipulate my screen. I probably don't trust my rules yet. So everything that you do, post them in class, right? We'll talk about it, what you did, what you didn't do, what you saw, what you didn't see, what was giving an advantage, what was perhaps taking that advantage away. And it's all going to stem from that great foundation, that momentum, clear path in an entry area. You need someone to tell you what you did right or wrong, guys. And that's what makes Nexgen so exceptional, in my opinion. Not only do you have somebody teaching you the software, that's what I do every day. I'm just teaching you how to read your indicators. But here's the secret that everybody forgets. I've made every mistake you guys will ever dream of making. Every one of them. So when I talk about trading into areas, when I talk about chasing somebody else's plan, when I talk about looking for too many things instead of looking for the best things, these are all items that hindered my forward progress. So I'm trying to give you the benefit of the doubt, but you guys are like a bunch of teenagers. You're all 10 feet tall and bulletproof, right? I was. So we're good. Guys, use this outline for education. Your path has been defined, identified, and proven over and over and over and over and over. Post your trades. Use your spreadsheet. Populate your spreadsheet using a checklist. Trades that come from the checklist, guys. Police yourself. Do I have the advantages every trade that I get into? And if I don't have the advantages, which one did I forfeit? And are the other advantages strong enough to negate it? Post your trades in class with your entries and exits and the rules annotated. If you have Snagit, just copy paste your spreadsheet right onto it, or your checklist right onto it. Pow, right? There you go, Safia. Study historical chart setups. Use the pictures generated in the live class. Grab them from the Discord channels. Create at least 15 images a day, right? 300 images a month at 15 images a day. Present the pictures in class, annotated with your checklist. Preferably copy paste the checklist on your chart if you're using Snagit. If you're using Capture, you're going to have to write them, guys. A little bit of work. 15 hours a week, Monday through Friday, you will receive feedback on your ability to follow your checklist. Notice that it's not you'll receive feedback on your ability to follow the rules. You'll receive feedback based on your ability to do what you're telling me you're doing, what you tell me you're looking for. And then if you don't have Snagit, guys, I've already posted this one in the room. Here's how you annotate the chart. Insert the trades that follow the rules onto your spreadsheet, guys. You have to study them and memorize them until executing the correct entries becomes second nature. Creating that database, right? Filling up your chart with the best of the best looks. Every rules-based entry gets in your favorite looks tab. Study these looks until they become easy to recognize in the moment. My spreadsheet has, let's math real quick. What's 45 times 3? That's 90. That's 135 plus another 12, so 147, 161. Guys, this is 161 pictures of rules-based entries, and I just gave it to you in the room. Study them, memorize them until they become easy. Define your management plan, guys. Initially, a mechanical approach. Where did it go? That eliminates emotion or opinion tends to be the most straightforward approach. I hate that approach is twice in there. I have to fix that. You can alter your plan after you're done with the education, right? If you're trading 2 contracts, your initial stop will be 12 ticks in your ATM strategy, but it will be adjusted above or below the window of opportunity. It'll be adjusted where the market shouldn't go. The market shouldn't go beyond 1-to-1s inside of favorable large triggers. And you've got that perfect entry because you studied it, you learned it. Your stop will be moved 2 ticks above or below the reversal bar in the direction of the trade. Once that reversal bar prints, you've reduced your risk. You've gone from 96 all the way down to 94.25. On a 2-lot, that is 3.5 points, guys. That's almost $200 of risk gone. Your first profit target will be $100. If you reach it, you're going to move your stop to break even. If you don't reach it, you're going to get stopped out. You will not win every trade, but if you reach it, you have $100 in the bank. They can't take that $100 from you. And now you're break even, which means that you are $100 in the bank and you have absolutely no risk on the trade. And it makes it easier to get to your second target of $200. At this point, you're either going to reach that second target or you're going to get stopped out break even. That's it. And in the beginning, you're going to have a lot of $100 trades with a break even on the second contract. But if it makes that second contract, you just made $300 on a high probability trend trade. And the cool thing is that if you allow yourself a minimum of 30 to 90 days to practice the mechanical approach to a checklist-based entry and a $100, $200 automated exit, you can adjust your targets based on experience later. Remember when we talked in that example plan? If you allow this to be your path for the first 20 trading days, what are you doing? You're creating a plan that's going to teach you how to read your charts. You're going to understand where the market is likely to continue, likely to go, where likely to stop. And the idea is that you're building this amazing foundation that's capable of winning consistently as you grow. And you will adjust based on experience. Guys, this is your plan to get to where you guys said you wanted to be. When you guys signed on with Nexgen, whether it was a demo, a lease, a lifetime, you said, I want to be successful. Guys, this is your path to success. You can either fight it or you can embrace it. Jose, everything says down. You get a pullback in at the lowest point inside of favorable large triggers. Your stop keeps you safe. You take profits at the first trouble spot. Divergence prints, you said, you know what? I'll get out. So I don't know what happened next, but Jose, you have odds favorable momentum. You have no termination conditions. You do have a second divergence. Let's see if the Pineski happened at 74.30. Oh, it just missed it. But it did pull back to resistance inside of favorable large triggers, didn't it? Rules met. Rules met. Why no trade? And this is that trust piece, right? This is aggravating for some people when I do this, so I'm going to apologize. Actually, I'm not really. So let's go through it as a class. Did we have odds favorable momentum? Yes or no? What do you guys think? Anybody? That's cool. I'll wait. I know how to do this stuff, guys. Yes? Did we have termination conditions? No. So I'm already halfway or 2/3 of the way there, right? For a high probability trend trade. Where is that picture? Guys, did I have an area for entry inside of favorable large triggers? There's my window, right? What do you think? Does an entry at the 1-to-1s fit the rules? No, Folger? Why not? And thank you for putting in. Why does an entry not fit the rules? Is it not? All right, so here we go. You know what? Let's do this. Even better. Where's crude? Let me get to my crude oil. Man, a lot's gone on, hasn't it? So Folger, do you know what you just did for me? And you're going to love this, I think. I think this is about to be a great lesson for some of you. And let's talk about, and Folger, let me give you this picture real quick. Man, I can't thank you enough for putting an in the room. So when I talk about favorable large triggers, it's large and synthetic overlapping. I use the term favorable large because they're both large triggers. One's synthetic because it's from a different time frame, but the reality is that they're both large triggers. Synthetic is a term that only says that it's coming from a different time frame. So when I have favorable large triggers, they're overlapped one on top of the other, right? Yeah, they are. And why do we look for favorable large triggers? Because it creates a smaller window of opportunity. So I say that because, Folger, imagine, if you will. Let me see if I can find. I think I have one in my spreadsheet, believe it or not. Da, 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 da. Got pictures for everything. So here's, oh, what did I do? There we go. And this is the one that I just stole, right? One on top of the other. Folger, look at the only areas inside of favorable large triggers is that tiny little spot right there, right? These fall outside. When the triggers are split, they're both still large triggers, right? And I may still, at the time of the pullback at the reversal bar, I had a mid-band at 90.12, but I also had one-to-ones all the way down here at those synthetics. So when we talk about favorable large triggers, the reason that we talk about wanting them to overlap is because it creates a smaller window of opportunity. Because if the market may continue from the highest point of support to the lowest point of support, look at that gap. Oh my gosh, that's too much indecision for me. So when we come back to crude, yeah, for sure. I'm telling you guys, you're never going to stop learning. So when we're looking at odds favorable, we're looking at no termination conditions, and I wait for that reversal bar, this is exactly what my brain does, Folger, and hopefully this will help a little bit. If I draw a rectangle from the bottom of my triggers to the top of my trigger lines, right? And they're still overlapped a little bit. I can squeeze these down to the lowest point of resistance to the highest point of resistance, and it creates that window right there. This is, without a doubt, the area where the market is likely to continue from. So if I enter at 74.25, I'm cool, right? I'm at the bottom of that window, which means that I realistically have to be okay with it going up to the top. And because of this pattern, do you guys remember we jokingly called it the Pineski? The pivot stop out may create a pivot stop out. For me, that means if I'm staying in this trade or if I'm just entering this trade, I'm going to give it a little room above this as well. But what ultimately happens with all this momentum in a clear path is it goes to the top of the window and then it starts moving down. So if I'm in at 25, once I get this reversal bar, my stop's at 30. I've got 5 ticks risk. And I can use Fibonacci and momentum to say, well, this market should probably go to 07 because of the momentum, because of everything in favor, because of the market coming to the area where it's likely to continue. And man, it doesn't even blink, does it? Until it reaches the area where the market is likely to go. So I was asking Jose, why no entry? And a lot of times you're going to do this as a new user, is you're going to take this trade, right? And you're going to get paid and you're going to get out and you're going to be like, heck yeah. Have you seen me? I'm kind of a big deal. And you're going to forget that that's a rules-based entry. And all that money that you made between 25 and 10, you can make again. The old double dip. So Folger, when you're talking about a trade inside of the large triggers, I'm talking about the synthetics or the large, either one. But what I'm telling you is that when those trigger lines overlap and create a smaller window of opportunity, it means less risk, right? It's less wiggle room. Did we just have an aha moment? I hope so. I love aha moments. Tony the Tiger. Sticking to a plan, right? Let's see what Tony did. Tony said, when I have a termination that creates a full reversal that provides me odds favorable momentum, that gives me a clear path, perfect entry, all targets hit. Beautiful, Tony. Textbook. 100% everything that we look for in a trade. Folger, you only use the synthetic as confirmation, not the large trigger entry. Careful on the language, right? There is no large trigger entry. There are areas inside of triggers. And it can be synth or large. But when they overlap, it creates a smaller window of opportunity. We're not taking a large trigger entry. We're taking an area inside of those large triggers. And maybe if it helps a little bit with it, the large triggers on your 13.2 are the synthetic triggers on your 5.1. Synthetic only means it comes from the 13.2. That's okay. No, I totally get that. So let's do this one. Mary rocks. Termination creates a full reversal. Full reversal provides odds favorable. Odds favorable gives me a 50-50 with no divergence and a pullback to an area of support inside of favorable large triggers. Did anybody get long other than Tony the Tiger right here at 74.55? Because it was a picture-perfect medium probability, everything in your favor. Holy smokes, I don't want to miss out on this trade. I hope so. And didn't we say earlier that because of where this came from and where it went, that was a likely spot for it to go? I feel like we took a picture of that. Oh, great googly moogly, guys. Hey, Marshall. Does anyone remember this? Isn't that a pattern worth learning? Oh, you had it at the mid-band. Mary, you're saying that with all this momentum from a good bottom, you expected a zero divergence push to go lower. That's all right. That's pretty normal. You too? Paul, you too? And Paul, you are the king of saying that with divergence, you'll take it lower, right? So let's see if we can turn this into a lesson that helps you guys a little bit. From the top of the triggers to the bottom of the triggers, guys, that's your window of opportunity, isn't it? No worries. Guys, if that's your thing, if you dig lower, that's cool. Go lower. With this termination condition, with that level of momentum, guys, this is like the best look ever, right? This is, I could teach a class with this momentum look. And with no divergence at all, zero slowdown anywhere from a great bottom, I'm willing, and this is just me, with all of these advantages in place, I'm totally cool. Because what is it? It's 1, 2, 3. It's a 4-tick difference, isn't it? Are you willing to risk an extra 40 bucks for this many advantages? That's what you have to ask yourself. And if the answer on a 50-50 is no, then that's totally cool. That's all right. But this is a trade where I can't find anything wrong with it. I mean, I literally can't find anything wrong with it. I've got so much strength on my 13-2 from a termination condition that creates a full reversal. I've got so much strength on my 5-1. I have the perfect trigger look. And I have a top of a window, and everything says, yeehaw, let's go. But where people make mistakes on this one is they get this look where it's weak triggers. They're like, well, it's a 50-50, right? I've got a 50-50. Oh, and I've got a slowdown. Mark said get in at the top. And they kind of misunderstand the lesson, right? Guys, is this your best look for any trade at all? Does anyone have a trade that says I'm going to start it off with anything can happen triggers? No. Yeah, blame John, not me. And then if this anything can happen triggers is compounded by a loss of momentum and anything can happen triggers, who's going to admit it? Who got long right here? Thinking I sure hope it goes up. It may not have happened in this room, guys, but I guarantee somebody in an exhausted market said, I have an area inside of favorable large triggers. I'm going to take that long and I'm going to pray. And what do we get? We get a little bit of an overrun. That little bit of an overrun sends us back to a 50-50. So not a great top, not my best look. Little bit of an overrun. And here I am again, faced with a 50-50. Couldn't even muster up 3 divergences on the 5-1. If I'm looking for an opportunity, because I'll take that 50-50 from the top of my triggers to the bottom of my triggers, from the lowest point of resistance to the highest point of resistance. Let's count. Let's talk advantages. I've got strong triggers. I've got a 50-50. I've got strong triggers. I have one loss of momentum, and that loss of momentum may give me a pivot stop out, and that pivot stop out runs directly into resistance inside of favorable large triggers, which means that really my thinking begins to go here based on patterns, which lines up with an area of resistance, but I have to remember that it's a bad top. Do you guys go through every trade talking to yourself like this? This is what I see. These are my advantages. These are my disadvantages. This is where I'm coming from. This is what supports the trade. This is what doesn't support the trade. If you're one of my tick watchers and you got a 2-tick fluctuation to the downside, who's short at 74.50 because they thought it was going without you? I know where my advantage comes from, guys, because I've studied it. And if this trade goes without me from here, I don't care. It means that it wasn't my trade. I was with you. Oh, Safia had not jumped in. You talk to yourself. I do all the time. Guys, this is my 100% thought process every time I go through a trade. This is what I see. This is where I'm at. This is where I'm coming from. This is what gives me an advantage, and this is what may be taking an advantage away. Ooh, Bobby, you may want to talk to somebody. How many areas aren't broken? I've got 2 areas not broken, right? There's the Pineski. Let's see what happens. And Paul, I love that we named a pattern after you. High probability or medium probability, guys? It works though, doesn't it? Once you start to recognize patterns, it changes things. So let's talk about where the market shouldn't go. It shouldn't go about right here, right? If it goes above there, it's not my trade anymore. It's a medium probability trade. But if you believe wholeheartedly in the Pineski, guys, you're already up $120 in this trade because of patterns. Because sometimes it overruns, right? But you're managing assertively. You know that 54 hasn't broken. It has the potential to break. Is there anything wrong with taking 7 ticks and having 2 or 3 ticks risk? And if this divergence prints with those triggers inside, maybe it's changing what happens on this medium probability trade. Now I'm giving away the advantage of momentum more so and not a clear area. Do you see how we just talked through this? Pattern recognition creates expectations. It doesn't mean that they're guaranteed to happen, but if I've seen this enough to know that with this much momentum, it's likely to give me another push down, I can take and manage assertively. And there's my assertive management right there. Sure, and it's not Paul's pattern. It's just, Paul and I talked about this every day in class 100 times, so I associate it with him. And let me show you exactly what it is, guys. When everything's great on the 13-2, right? When you've got this, divergences tend to take out the previous pivot. That's all it is. A divergence with odds favorable momentum on the 5-1, I can create an expectation that it may take out that previous pivot. So I begin to look for those key areas coming at that takeout spot. Does that make sense, Ziba? So this is one of those things that may help me gauge an entry point. Let's see if we can find other examples of it. And it doesn't happen all the time, but it creates expectations, right? That was into a termination condition, so it doesn't really make a difference. There's a pivot stop out. Here's my previous pivot. Here's my support, and it's below everything. And it didn't really work out, but you can start looking for these. And guys, it's gauged on the 13-2 being correct, right? It's all preempted on the 13-2 giving you the best look. If you're trying to still take trades with a horrible 13-2 because you said, well, it's going to take out the previous pivot, it doesn't mean that it's not going to rail right through it, right? So Mary Rocks, earlier we were talking about what are our most successful 50-50 trades. Well, they come from termination conditions that create full reversals. They have a higher chance of winning. Not a termination condition, guys. Everything broke, and this 50-50 didn't work out, did it? If you took a shot at it, it gave you a management opportunity, guys. And now we're in limbo. The smalls are up, the large are down, the large are rolling above, the small are below. You're in that little limbo area right now. Does that make sense? All we're doing is trading patterns, guys, looking for advantages. I'm going to see what Dave did today. Dave, you said anything can happen. 50-50 on the 21. Couple divergences. You're not looking for longs here. It's just not your trade. Outside of favorable large triggers. Dave, Great job following rules, right? Rules are designed to keep you safe. Oh man, and the large triggers were a full bar away. Paul, they're trademarking it. David, great chart reading. Great chart reading. Let's just look and see how many times it happens. Divergence. Oh, no divergence printed. This one's from a termination condition. Pivot stop out, takes out the pivot, no trade. Divergence here, takes out the pivot, the divergence high. Since it's at resistance, it pushes back. Divergence here takes out the previous pivot. It doesn't mean that it's stopping there, right? Look at this, pivot stop out. Here's a big chart example. Pivot stop out, pivot stop out. It lines up with an area and the market pushes up. And even if there's not a pivot high, if I have a pivot stop out here, my anticipation is that I'm probably going to get up to this area here. So Tony, that's all it is. It's not an entry, right? It's a pattern recognition. And I'm looking for more instances. That was a grind down. And there's not a lot of instances on the 13.2 right now. You're going to see it more on the 5.1. You're going to see these divergences and that previous pivot. And if you simplify it, guys, let me simplify it. Divergence typically, not always, takes out the previous pivot. What are things that can change that? If I've got the best momentum ever on my 13.2 and it is screaming in the direction of the trade, well, that may affect whether or not this smaller, faster chart can take it out. So based on that pattern that we saw earlier, a bad bottom takes it to the midband and resistance and finishes the move. Can we use that same expectation? Trying to make it so we can see it. A bad top goes to the midband and support. Could that be potentially continuation of the move? The rules still have to be met, right? But does this look and this look add a little fuel for thinking about a 50-50 here? I don't have a good look over here, so I'm probably not taking it this far away, below everything, but we'll see what happens. But this is just a pattern expectation, isn't it? It's kind of the same thing going the other direction. What's the overall trend of the day? Well, the sellers did exactly what they wanted to do, right? They brought it all the way down to that key Fibonacci area, and then it starts to move up. Right off that key Fibonacci area, finishes up to right where the sellers wanted to be, working their way down. The buyers never made it to 75.40, did they? And this is a long-term look. The buyers tried and got fought. They tried again and got fought. And the sellers pushed it all the way back to where they wanted to take profits. And the buyers are climbing that hill again. Here's your big time frame look, right? There was a huge sell-off. No worries. We'll do it with this picture right here, Mary. Let me stretch it out a little bit. And it's really going to be pretty simple for you, I think. Price reaches an area, absolutely nothing goes through, creates a reversal. That's a strong bottom, right? Trigger lines exceed the area. creates a reversal. That's a weak top. Price reaches an area, creates a full reversal. That's a strong top. Right up until we reach support in a mid-band. The large triggers don't follow. It kind of negates that strong top through the termination condition here. And strong tops and bottoms aren't guarantees. But if I'm coming off of a Fibonacci area that absolutely no trigger lines break through, it's got a better chance going the other direction. Here the smalls break through, it's a 50-50. It pulls back, but nothing flinches, and it continues down. Not from a Fibonacci area. Pulls back up, and then it comes back down, Mary, and it reaches an area, and none of the trigger lines break through, and that's a strong bottom. And then it exceeds the area, and the trigger lines make it to the other side, right? That's not a strong top because it's not coming from a fib-based area. And when I don't have a strong top, I'm giving extra attention to that midband or any areas of support or resistance that are next to it. Does that help a little bit? And you can scroll back and you can look all day long. Strong bottom, overrun, pulls back, continues up to the next area. Where did this downtrend start from? Man, they killed it to the downside. It came from a pivot stop out at resistance. That's a strong top. That's a weak top that pushes all the way back to support in the midband and finishes the move to what ultimately becomes a strong top. That's a weak top that pushes all the way back to the midband and finishes to the next key area. Here's a strong bottom. Well, nope, it's a little weak. Pushes up, pushes back down, retest. Now I have a pivot stop out at fibs. That's what starts the move up. Weak bottom, straight to the midband. Weak bottom, straight to the midband. Then we get a good one, but it pulls up and it goes down to that next key Fibonacci area. Weak bottom, straight to the midband. Weak bottom, straight to resistance in the midband. Do you guys see the pattern? Is it guaranteed to happen every time? Absolutely not. But if you take 100 pictures of this happening, you start to trust it, and it adds one more level of chart reading to help you find some success. Strong termination condition. Weak top suggests that this 50-50 is not going to work, and it didn't. Smalls above the large are wide. They're angled in the direction of the trend. You've got one line at the large triggers with no divergence. It's a medium probability trade. But if you're identifying the only area of support inside of favorable large triggers, that's it. You have to make a choice on whether or not you're comfortable taking it, right? Paul, today has been an amazing day. Did I look at your picture yet from 1152? Oh, everything says up, no divergence, rockstar entry. All day long, Paul. Beautiful. Safia. Apparently you and Paul are in cahoots. Strong bottom, 50-50, no divergence. Talk to me about your entry, Safia. Are we trading off of large triggers again instead of areas? Did you already regress? Because you're a full point. No, don't be sorry. But you know that I have to point it out, right? Because you added $50 of risk and you took away $50 of profit. 4 times over. That's an extra $200 of risk. And it's $200 less into your bank account. Beautiful trade, right? Areas are bounce points. Great job, guys. Great class today. Safia, will you write that down and send it to my wife, please? Because she'll never believe it. Guys, that's it for me today. Thanks for being here. Your participation was unbelievable. Unbelievable. Gary, do you have a question on it, or are you just showing charts? I'll stick around if you have a question. Otherwise, I'm going to go try to make some money. Guys, keep these questions coming. Keep these observations coming. Keep these pictures coming because you're going to get smarter. Gary, I would be mad as hell if you missed this one. Why so high? Why did you wait for confirmation, Gary? 50-50 trades. No divergence on the 5-1. Enter the trade. 16.25, guys. 16.50. That's your entry. That's your rule. What the hell does a flat midband have to do with your rules? If it's pulling back, it's a moving average. It has to flatten out, right? Unless you have flat midband on your checklist, Gary, follow your checklist. Otherwise, get to a point to where you trust it. Cost you $200 breaking your rules. Breaking your rules, not my rules. You broke Gary's rules. You didn't enter at the area without divergence on a 50-50 from a good bottom, and it cost you a lot of money. You got to trust him, guys. And Gary, I'm not beating you up. Consistency is key. If it's a rule, follow it. If it's not a rule, follow it. Gary, you're a rock star. You know you're a rock star. You're doing awesome. But you got to figure out when it's cool to get in at the area and when it's cool to wait. You're doing great, man. You're doing great. Don't worry about the class. They're not paying your bills. Don't worry about anybody but you. It doesn't matter if they like what you did, if they don't like what they did. It doesn't matter if they like your rules or hate your rules. It just doesn't matter. Guys, there's that 50-50. If you took it, it was medium probability. Good. Man, when you're happy with your trading, don't break the rules. Stick to it. I probably would have lost this one. But with my area for entry, the only line, I wouldn't have lost much. There's no way in hell I would have put a stop below support. I would have risked maybe 4 or 5 ticks on this, tops. Hey, congrats, Paul. Good job. Guys, Paul's going to be teaching class tomorrow. That's 3 people today have told me that they've passed their Apex accounts. Keep doing it, guys. Keep doing it. Gary, keep doing it. You guys take care. I will see you tomorrow. I'm going to call it a day. I'm going to go draw on people. Enjoy your afternoon. I'll be back tomorrow morning, 9 a.m. And we're going to do it again. Same thing. Bring me pictures. Bring me questions. Help me give the illusion of being smart for you guys. I'll see you in the morning. Take care, guys.